Good morning, good afternoon, and good evening. This is Dennis Wilburn with the Active Trend Traders, and we're going to talk about how to make money trading stocks. Joining us from Zurich, Switzerland is Michael Bishop. Welcome, Michael.
Hello,
And
nice having me.
yeah, glad you're with us. Um, so let's get going. As you are aware, if this is your first time joining us for the How to Make Money Trading Stock webinar, we have had a slight, major format change. This is now the sister broadcast. Its brother or sister is done on Mondays and just after the market close, and it's called After Market Monday. And both of them have been condensed down to where we want to cover about 10 to 15 minutes, because I respect the value of your time. I'm going to provide some actionable information so you can get out there and do your analysis for the week, and what we learn on Monday will help hopefully set us up for the rest of the week. We want to remind everybody that all the materials we present here are for training purposes only. Traders should always paper trade prior to the risk of their own personal capital. And then here's Michael, and
I think you can just skip this because I have not invited anybody for today.
Okay, excellent. And so there's a little bit about who I am. You can go back and check the video if you want to see the more in-depth version, or you can just go to the website, activetrendtrading.com. So, how to make money trading stocks. The objective of this webinar is to provide timely, actionable intel at the end of the week and a review of what we've done. I'm going to modify that slide briefly. We're going to do a market review. We're going to look at the stocks and ETFs, whether they're setting ups and the outcomes of the stocks we looked at, and then any what else if we have time. Again, I'm going to limit ourselves to no more than 15 minutes for this webinar. And I'm always on the lookout for new quotes, and I really like this when I saw it. You have been given the keys. Now learn to open the door. I like that. So here's where we're sitting. As of about 9 o'clock this morning, the markets they are all back in the green for the year so far. We have a mixed market today. We all know what's going on. At 4 o'clock Eastern time, they will be voting on what to do with healthcare, and we will see what transpires with that. So hey, let's get it going and take a look. As if you are a premium member, you're very much aware that yesterday I sent out an alert. We actually opened a position in IWM, which is the non-leverage ETF for the Russell, with the anticipation that we knew, and it was a straddle position, we knew that at that time we thought the vote on the healthcare reform was going to be done yesterday. That was postponed, and so today what we're getting to see in the market is just kind of marking time. And so most traders that I know are very light the market, or flat the market, with no investments at all going into this vote, with the anticipation that things could get, go one way or the other. There's a belief that's out there that if healthcare is not reformed, in other words, if they do not repeal Obamacare, then there's an expectation that will slow down getting to the business-friendly and citizen-friendly tax breaks that they have planned for later in the year. And so we'll see what transpires with that. As you can see, looking here at the S&P, a couple of days ago, we get this really great sell-off as it broke out of this, and we had highlighted this in one of the trader reports, that we had this triangle going on, a symmetric triangle. We broke down out of that on Tuesday, sold off hard to a level of support about the 2340 level on the S&P. And now we basically have a downtrending channel in place, and we'll see if prices work their way back up to the top of the channel or if they're going to roll over right here. I'll be watching the futures on the S&P and the Dow and the NASDAQ and the Russell to see what transpires after the vote today. Again, the expectation is if the vote goes, if it does not pass, the reform does not pass, then it could have a negative influence on the market, at least an initial reaction. And so that's one of the reasons why we just want to stay light. We don't want to be, you know, I don't want to be in a lot of big positions. As you can see, prices sliced through the 8-day and the 20-day. You can't see the 20 here. The 8 and 20-day, and then basically came up, tried to bounce from the 8-day yesterday, fell back down. Got up close to the 8-day today, and now it looks to be selling off. But again, both yesterday and today were kind of just standstill, do nothing type of days. And as we see on a weekly chart, you know, let's forget about the healthcare issue for a second. On a weekly chart, what we're looking at is we basically have a bearish engulfing on the S&P that has engulfed the last 1, 2, 3, 4 weeks worth of price movement. And it's right at the 8-period moving average, which corresponds approximately to the 50-day moving average. We have a little bit of crossed out of sync information. We have the TSI on a daily chart looking like, and the momentum in the lower range looking like it wants to pop back up. However, on the other hand, on a weekly chart, we have a crossover with the TSI. Momentum is pointing down. And those of you who are at our Wednesday night session where we talked about the market forecast tool, as you see here, we have the longer term momentum indicators turning over on the weekly and pointing down on the daily. So weakness is how I would describe the S&P. Any comment on the S&P, Michael?
No, I like your summary.
Okay.
And I hope you're right, because I am kind of also looking forward to correction.
Okay, so you may be a little bit short the market. So here's the NASDAQ. NASDAQ has held up better than the other indexes, and basically, but however, on the same Tuesday, it gets a huge bearish engulfing pattern that covered 12 days worth of price action. So, you know, it's kind of interesting. And both on the S&P and the NASDAQ and the Russell, Tuesday was the biggest day down that it's had since before November of last year. Again, a little bit of out of sync between the TSI on the daily and the TSI on the weekly. If we close where we are, we will have a bearish engulfing of last week's candle, and those tend to be, you know, pretty predictive of at least going into a bit of a correction. We'll see how far that correction goes going into next week. One of the things I will look at next week and watch, if the measure passes tonight, we may get a real quick relief rally, and we'll have to be watching it to see if it goes back into a full-fledged up move, and or if it's just going to be a retest to get back to the previous highs. And so, because we have been on the market's been on a really nice run since the election. Russell, if I was going to be playing to the downside, I would be looking primarily at the Russell. Let's remove that drawing. And the reason for that is because the Russell tends to react more quickly. It is not a weighted average, and we can also take and we can draw a little bit of it's a fairly steep line, but we've got this little thing going on here. It's got a channel. which we can basically. Now when I draw my channel lines, you may notice that occasionally the tails on some of these candlesticks drop down below the channel. You know, drawing channels, drawing trend lines is more an art than a science. And so you're going to get a little bit of, you know, where it drops down below and moves back up. But we're just looking to capture the majority of the move. And clearly right now, the Russell is in along with the S&P, is in a short-term downtrend because it has been putting in lower highs and lower lows. Definition of a downtrend. As of this time, it is, you know, a short term because we really haven't broken down harder. Let's say, you know, we could take this line right here and draw this up through here. Here's a longer term on a weekly chart, the longer term uptrend. And right now, that longer term uptrend is still intact. So we're in a short-term downtrend within the context of a longer-term uptrend. So just keep that in mind. Again, you know, not a lot of reason. We did open the 134.50, the April 28th straddle, which means we bought both a call and a put, with the expectation that there will be a reactive move once they have the vote on health care. And then what I will do next week is I will start selling weekly premium against those positions, or if I gain 1.5 times what I paid for the position, that's in other words 50% over what I paid for the position, I will close out both positions. And I kept that bet really small, about $1,100 worth, knowing, you know, it will probably, unless it closes right at 134.50 on the 28th of April, it will have some value. So that's what we got going for the Russell. And let's see, what is next? So really quickly, here's the stocks that we were looking at last week, or on Monday we identified. We'll take a real quick look at those. We're doing time-wise. And we'll do that right now. Those of you who are on the training on Wednesday night, if you have any questions either about the whole moving average, in other words the red and green balls, and or the market forecast tool, please shoot me an email and I will try to address those because I want to make sure that they're absolutely clarified. So what we had is we had Zion on Monday, which was, here's Monday. And it looked like it was going to go down here and hit a support level, but it fell out of bed with the rest of the market. What we're seeing on Zion, real weak rebound off the lower Keltner and lower moving average envelope. This is the kind of move, this real weak kind of move is what you would anticipate in a market that wants to continue correcting. So Zion, nothing. Matter of fact, I would take that off my list. NetEase slightly different. It is maintaining a real shallow descent, and it's found support at the 280 level. And if you're watching this for next week, if we get this green candle closing above the red ball, that may be an indication that it will be time to get long on NetEase going into next week. I'm not going to take action on it today simply because of the healthcare vote today, but NetEase is a good one. SBGI, which is Sinclair Broadcasting, again, nice, you know, easy pullback, not a huge sell-off like the rest of the market. Now recognize, you know, to move back up to the top, this is a slower mover, and to move back up to the top is not a huge move, but we're below the 8, but we get a reversal candle yesterday, get a green candle above the red ball, and today we are just an indecisive type move. TSI on a daily basis may be turning up. So SPGI will make my list going into next week. CMA, no, because look at real weak rebound. TCBI, no, real weak rebound. Fell like a, like a cow, like a turd from a tall cow. Splat, came back up, but really, really weak reactive move. And lastly, CFG, weak move again. Huge down, little, and a really gradual going up. You could almost take those ones that had those falls and are coming back weekly and move those to a short list. TZA I'll be looking at next week. I don't want to do anything with that today, simply because we don't. That's the downside leverage index, leverage ETF for the ISW. A couple of indexes, ETFs we've added to our list are, let me go in here and pick this up. Position, and I want to say thanks to Eric. JDust, it is the minor miners. The minor miners are smaller cap miners. This is an interesting, this would go along with Dust as a potential entity to trade. A little bit lower price, but it actually moves more, and its twin, or its, if that's the evil twin, then this is the nice twin is JNUG. Again, this is the bullish version of the miners, and again, this is the minor miners. Note that it is below the red line. And lastly, we'll just throw up Tesla real quick. Tesla is the gift that keeps on giving. It is closing in on this downward trending resistance line. We'll see where it closes today. See if it sells off into the close. But look for Tesla next week. This would be a green candle above a red ball, maybe a setup for next week. So now, Michael, as I'm going to other slides, this is basically the rapidity, the fastness which we're doing this session, and we're already at 17 minutes, so I got to hustle up. But what do you think of it? I know he's out there.
Yeah, hello.
Yeah.
What was the question?
The question is that this is the fast and furious version of how to make money trading stocks, trying to keep it to 15 minutes. What do you think of the pace?
I think the pace is okay, but I haven't followed for the week, so I think it's a little bit, so it's impossible to put this into a context.
Okay, and that's a good point. So I want to remind everybody that the webinar on Monday, the After Market Mondays, is a free webinar, so everybody can sign up for it, and please tell your friends about it. So the reality of trend trading: know your trend, define the area of interest of value for where you want to take action on a trade, and define the triggers, strategy, and or targets. We only control when we enter, when we exit. What happens after after we enter is in the hands of the market. Never chase a signal, never. There will always be another day, another market. If you miss a move, so what? Or as my mentor used to tell me, what he used to tell me was that if I complain about missing a particular entry, he'd go, so what? He goes, the best trade of the year comes around about every 2 weeks. So here's where we're sitting with the profits booked to date on the active trend trading service. Here's where strategy 3 is doing. I get a lot of attention on strategy 3. We may have to break that out in the future, make it a standalone service. It's doing quite well. And so that basically covers. I will call everybody's attention, this current discounted amount for the monthly membership, the $32.99, which saves you $22 a month, is only going to be in effect until the end of March. After that, a price increase is going into effect for both services. So that's it for today. I got time for a couple of questions. 2017, is a season of explosive growth. Keep your egg growing. Trade wisely and profitably. You can catch me on either of these two spots, and we'll be ready for the final hour in about at 12 noon Pacific time. So until Monday, aloha. Trade wisely.
Yeah, aloha.
Trade wisely and profitably. This isn't from my house, but it's a place here on island. So any real quick questions, guys? Okay, thank you very much. Then if you have any questions, please email me. This will be posted to our YouTube channel, Market Tech Talk, a little bit later today, and you'll get a link sent to you. So have a great weekend. God bless everybody. God bless, Michael. We'll see you. We'll talk to you in the near future.
Okay, bye.
Bye. And so, hey, Gene, real quick, the offer is you can catch this here, and there'll be a link on the final page once this is posted that gets you into, where you can basically, if you're looking to become a member, where you can go right to this specific offering. So, okay, good night, everybody, or good evening.